Hi traders, Zoran here from Eightcap, head of sales, also a research analyst. This week, I'm going to be focusing on only a couple of instruments. First of all, I would like to actually discuss and chat about USDX, so US dollar versus the basket of all major pairs. And the second one, I would like to discuss the fundamentals and the macro technicals is US dollar, Japanese yen. That pair has been actually getting a lot of traction here with us at Eightcap, and we're seeing some heavy flows go into the specific major currencies. So why don't we kick it off and start with USDX? So this is a daily chart that I've got here at the moment. I've got some Bollinger Bands, I've got some support and resistance levels, and I've got some moving averages as well. 50, 100, and 200 days moving averages. As you can see from all the way back in September 2022, from its actual peak, USDX or US dollar has been actually moving downwards, or it's been depreciating against the majors, and came back and actually touched the low back in February 2nd. That was the actual low for the USDX, bounced off that and actually started moving upwards. And then once it actually reached the highs on 8th of March, it started depreciating once again. I guess the reason for that is a lot to do with Fed, Jerome Powell, interest rates, inflation. So these are the key drivers of the market at the moment. And, once Fed started talking about potential pivot, which means reduction of interest rate rises and moving more towards inflation kicking in nicely and potentially looking at reducing the rates later in the year. If things work out well, then USD actually wasn't considered as a safe haven anymore as it was in the past. That's probably the main reason why US dollar started depreciating heavily. So at the moment, what we can see is I'll move to the 4-hourly chart just to have a look at the last major range. We can see USDX actually did a nice double bottom and actually started bouncing upwards on Friday's close, and that's mainly to do with the retail sales figures. But outside of that, last week we've also had CPI figures that came out, and CPI figures actually were much anticipated news for the last week on Wednesday night, and it seems like inflation is slowing down because the CPI figures dropped to 5% year on year. So probably a little bit more than what the market anticipated, and we've seen the clear sell-off in USDX. As a result, all the majors, the likes of Euro USD, Japanese yen, also GBP, actually pushed upwards quite nicely. Friday's close was actually kind of indecision. USDX actually pushed upwards nicely, which probably wasn't what market was expecting, but it could be just counter move upwards before we actually see further weakness over the coming days. Again, this will all depend on the upcoming Fed interest rate decisions and the Fed Chair Jerome Powell coming out. We've seen a little bit weaker non-farm payroll data or coming in line with the market expectation. We've seen the CPI data coming in line with the expectation, or a little bit lower retail sales too. So it seems like, what they've done over the last 12 months is actually working nicely at the moment. The next pair that I would like to look at is USDJPY, so US dollar versus Japanese yen. We can see that yen is moving quite nicely and coinciding with that 50% of the Fibonacci level from the major high on 8th of March all the way to the actual major low on 24th of March. So what I've done is actually apply the Fibonacci level from the high to the low to give us an indication where the 50% is, and also 61.8 and 78.6%. So that 50% of Fibonacci level appears to be providing a key resistance level there. Also, what I've got is actually a support level on USDJPY around 130 to 131 level. That's the key floor there. And also got the upside of 137 to 138 level mark, as well as an upside if USD was actually to gain strength. So with regards to dollar and yen, we've seen quite bearish dollar. Only on Friday, as mentioned previously, it's actually got the bulls back up again. Yen already showed its attractiveness at times of distress with banking crisis. So we've seen yen appreciate in a second half of first quarter. We've also seen yen appreciate also in the first half of second quarter as well. So yen had quite a nice appreciation. It's actually coinciding very nicely at the moment as well around 50 and 100-day moving average as well. So that's a key level to actually look at as well, because that will pave the way in terms of further yen movement over the coming weeks as well. So yen is normally a hedge against the risk, and clients quite understand that nicely. So it will be interesting to see what happens over the next couple of weeks as well. The last point that I would like to raise as well is the actual economic news for the week ahead. So what I would like to do is actually bring up a QT calendar of Eightcap. What we have here is filtering out the impact level news as well. What I would like to do is actually for the week ahead, have a look at the high impact news only. Or tomorrow night, we do have, in fact, ECB President Lagarde's speech. They're talking about another 50 basis point interest rate rise or being a little bit hawkish. So that's actually playing up nicely with euro, especially versus the USD, which has been actually gaining quite a bit of weakness as well. We've got consumer price index on Thursday from New Zealand. And we've got some news as well in terms of Canada, Bank of Canada Governor McLean speech as well. On Wednesday, we've got Great British Pound. So we've got the CPI data coming out as well. And Friday's news is actually S&P Composite PMI data as well. Acuity calendar is really good because it gives you the level of impact news. It also provides you further details in terms of what the market is expecting, what the numbers came in previously, but also what is the forecast for that particular day or week in terms of the numbers. There is greater details as well, in terms of how it affects different asset classes. So it's probably highly good to actually use that or play around with it, because given the volatility that we had over the last couple of months, it can actually provide a great insight in terms of the news that are coming out and how it will actually impact any trading pairs that you're currently trading yourself. So that's pretty much it from me. Hope you have a great week ahead. If you have any questions, by all means, please get in touch with us. Happy trading, and we shall talk next week. Take care.